to the story that markets have been eyeing all day and will possibly have some impact in tomorrow's trade as well, which is the final policy meet of 2019 of the U.S. Federal Reserve. So the street expects the U.S. Central Bank to hold rates for now after it has already slashed rates thrice this year. Cues for road ahead will be also important to watch out for since inflation is hovering around 2%. Jobs and retail sales data is showing improvement as well. The Fed chief may reiterate his wait and watch mode too, giving us more perspective on why it's important, why it matters, and how it can impact emerging markets like India. To speak on this, I'm joined now by Peter Cardillo, who's speaking to me from New York. He's Chief Market Economist at Spartan Capital Securities. Peter, thank you for speaking with us today. What are you expecting from the meet?
I think the Fed is going to stay on hold. This is no surprise. However, I think the communique is probably going to be somewhat tilted towards the hawkish side. I say this because so far some of the macro news that we've been getting suggests that maybe the economy might be recharging. And of course, there's no inflation problem at this time. In fact, this morning we got the CPI, which was a little bit above expectations, but still clearly quite tamed. And so that just simply means that the Fed doesn't have to worry about inflation. And I think, we're probably going to see the Fed stay on hold in the first and possibly even in the second quarter. And if we are correct in saying that maybe the economy is recharging again, that would lead me to believe that the next move is probably going to be for a hike and not a decrease.
So everyone largely agrees, and as you said as well, that we are not going to see a decrease right now. But interesting point there, Peter, that you see a hawkish stance and the preparation for a hike. What is the commentary that you will be watching very keenly, more than any action?
Well, look, there's no question that in the statement they will highlight the risk factors, and those risk factors for the moment are still, valid. We're talking about the trade, with the trade war with China. We're talking about risk with the British exit that might be a problem. But I think if we get some sort of resolution, which I'm a firm believer that we will, at least an initial agreement for a first stage of trade war between China and the United States, and I think that's going to happen. It could happen even by this Sunday. And what I mean is, any cosmetic deal, perhaps just a postponement of the $165 billion that are going to be imposed on the 15th of this month. If that's relaxed or just postponed, that would be a step forward, and certainly a relaxation in some of the fear factors tied towards the trade war. So that to me is the greatest concern and the greatest risk for the markets. And certainly if there is no resolution, then of course all bets would be off. Then the Fed may need to rethink, but I don't think that's going to be the case. I think there will be some resolution very shortly. And so based on growth, maybe around 2.25%, the Fed fund rate is what, 1.5%. That suggests that the next move by the Fed would be a hike and not a decrease.
Peter, what's your sense on, the kind of commentary that you're expecting, a move towards a pause and then a hawkish stance? What do you see that impact being on emerging markets like India?
Well, I think it would be positive if we stay put for a while. I think that's, positive for the emerging markets. And I think the greatest the greatest thing that the market would want to look forward for, especially in India, is a relaxation of the trade war, because the trade war is what's basically overhanging global economic activity. And so if we come to some resolution, obviously trade agreements with the United States and India could be worked out. President Trump has said many times that he's looking forward for a good trade deal with the Indians, and that would just help it, I think. It would accelerate that pace, and that would be positive for the Indian economy and for most emerging markets.
All right. Thank you so much for that update. Peter Cardillo there explaining the importance of the FOMC meet. You could possibly see the response to that later this evening. The outcome will be known later this evening.